Hello, everyone. In economic life, insurance institutions play an important role, providing protection for individuals and enterprises against risks. Today, we will study the topic of insurance institutions in Foundations of Finance. Some of you may ask, what do insurance institutions have to do with us? In fact, from the moment we are born, we may already be exposed to insurance. For example, medical insurance during infancy, accident insurance during school years. These are all ways in which insurance institutions safeguard our lives. Understanding how insurance institutions operate helps us see more clearly how to use insurance to plan our lives and avoid risks. Therefore, the content of this lesson is very practical, and I hope you will listen carefully. In our lives, we inevitably encounter various accidents, such as illness or natural disasters. When these risks occur, insurance institutions play an important role. Imagine that your carefully managed shop suffers damage from an accidental fire. If you have property insurance, the insurance institution can provide compensation and help you get back on your feet. Or suppose the breadwinner of a family suddenly falls ill and requires huge medical expenses. Health insurance can reduce the financial burden on the family. For students, understanding the operation and functions of insurance institutions not only helps you choose suitable insurance products for yourself and your family in the future, but also enables you to better use insurance tools to reduce risks when participating in economic activities. In this lesson, we will take a deeper look at insurance institutions and uncover their mysteries. We will study 4 aspects: the concept of insurance institutions, their main types, their core functions, and their development in the ASEAN region. Insurance institutions are organizations established in accordance with the law, specializing in insurance business. They collect premiums to establish insurance funds. And when the insured suffers a contractually specified risk event, they provide economic compensation or pay insurance benefits according to the contract. Simply put, everyone pools money together, and when someone encounters difficulties, that money is used to help them. Commercial insurance companies are the most common type of insurance institution, operating for profit. It offers a variety of insurance products to individuals and enterprises. For example, life insurance provides benefits when the insured person dies or reaches a certain age, while property insurance compensates for accidental damage to assets such as houses and vehicles. In Indonesia, with economic development, enterprises' demand for property insurance has grown, insuring factories and equipment to reduce economic losses from accidental damage. Policy insurance institutions are established or supported by the government, not primarily for profit, but to achieve specific policy goals. For example, Vietnam's export credit insurance institutions safeguard local enterprises exporting goods or services, effectively reducing risks in international trade and promoting Vietnam's foreign trade development. Insurance institutions have 3 core functions. 1. Risk diversification. They pool the risks of many insured persons so that the losses of a few are shared by all. Example, in Thailand, many farmers purchase agricultural insurance. When some regions suffer floods or droughts and crops are damaged, compensation funds come from premiums paid by all insured farmers, achieving risk diversification across the group. 2. Economic compensation. When the insured suffers a contractually specified loss, insurance institutions provide compensation according to the contract, helping them resume production and life. Example, in the Philippines, after typhoon disasters, affected residents and enterprises receive compensation from insurance institutions through property insurance or comprehensive household insurance, which is used to repair houses and restore production. 3. Fund intermediation. Premiums collected by insurance institutions can be invested before claims are paid, supporting national economic construction, such as infrastructure projects. Example, In Malaysia, insurance institutions invest part of their premium funds in infrastructure projects such as roads and bridges, promoting economic development while generating returns for themselves. Insurance institutions in ASEAN show diverse characteristics. With economic growth, national insurance markets continue to expand, and insurance products are becoming more abundant. Some local insurance institutions are gradually growing stronger, while many international insurance institutions have entered ASEAN markets, bringing advanced management experience and products. However, the level of development varies across ASEAN countries. In some, insurance coverage is still relatively low, leaving significant room for growth. From overall data, by 2025, the ASEAN insurance market, total premium income, is expected to reach $165.24 billion, with the life insurance market at $114.56 billion, and per capita insurance expenditure around $237.08. From 2025 to 2029, the total premium income is expected to grow at an annual rate, compound annual growth rate, of 3.55%, and by 2029 the market size will reach $190.01 billion. Different countries show different development characteristics. Singapore's insurance market is mature. Due to population aging and rising medical costs, demand for health and life insurance products continues to grow. Indonesia's life insurance market is developing rapidly, especially with increasing demand for microinsurance products among middle and low-income groups. Thailand's insurance technology is advancing quickly. Many Start UPS have launched innovative products such as mutual insurance and usage-based insurance, meeting personalized needs. Malaysia's Islamic insurance, Takaful, market is gradually emerging. Nevertheless, ASEAN insurance markets remain uneven, with low coverage in some countries and huge potential for expansion. In this lesson, we systematically study the concept, types, functions, and development of insurance institutions in ASEAN. Insurance institutions are closely connected with our lives. After class, I hope you will pay more attention to insurance phenomena around you, deepening your understanding and application of this knowledge.